Former Fed Governor Randy Kroszner joins us now, also professor at University of Chicago's Booth School of Business, external member of the Bank of England's Financial Policy Committee. It's great to talk to you, Randy. I don't understand why Fed Chair Powell would signal anything different at this meeting, because he's got 2 jobs reports, 2 inflation reports, and a Jackson Hole meeting between this week and September. So he doesn't have to know what's going on for September. What do you expect?
Well, I think, as you said, it's pretty much baked in the cake for a quarter-point rise. But I think the atmospherics are going to be fairly hawkish. I think he's going to say the job is not yet done. Sure, they're very delighted that headline inflation has come down. They're still going to say that they're certainly for their favored measure, the Purchasing Consumption Expenditure Index, and especially the core version of that strips out the volatile food and energy sectors. That's still very far above their goal. So I think they're going to remain vigilant, and so I think it's going to give a fairly hawkish message.
So how do we square then the disconnect between the market thinking they're done after this week and the Fed thinking they've got more to do?
Well, I think what the Fed wants to do is keep their options open, and I don't think they want the markets to become too sanguine, because if the markets say, hey, they're done, and equity prices can explode and all of their asset prices go up, that makes the Fed's job more difficult, because it's going to be more difficult to rein in the wage pressures and other price pressures.
So what is your expectation at this point? Do you think they raise again in September and then they're done and then they stay restrictive for a long time?
Well, I think, as you said, there's going to be an enormous amount of data that comes in, much more than usual. It's always between this meeting and the September meeting where they get multiple reports on all the relevant variables. So I think whether they go or not will depend on the data. But I think 25 basis points one way or another isn't going to make or break the economy. What could make a very big difference is how long they keep rates up, even as inflation starts to fall.
And do you think it's going to be longer than the market thinks at this point, which is March?
I think they're going to keep rates elevated for quite some time. I know the markets think that, well, whenever we've seen the unemployment rate go up, the Fed has always come in and helped out. I think they realize that they need to risk a recession in order to make sure that they've stomped out inflation. They don't want to have happen what happened in the late 70s, early 80s, when the Fed stopped too early, cut, and then inflation took off again, and then they had to raise rates to double-digit levels.
I agree. I wonder how much they're watching this UPS strike as well. 340,000 employees potentially on strike, supply chain issues, inflation issues. That's no joke.
Oh, for sure not. But I think they'll largely look through that and think that's more of a short-term impact rather than a long-term impact. But I think if you go back to high inflation times, those are times when there's a lot more labor unrest. And so I think that's one of the broader issues that they do have to think about. High inflation means a lot of disputes between workers and firms.
Bottom line, Randy, what do you think that the Fed is going to keep on this message that they haven't seen enough evidence that inflation is sustainably on a path to their 2% target, right? That's been the message. Yep. What's it going to take to get there? Is it more disinflation reports, particularly in core, or are we going to have to see weaker economic data from GDP, from housing, from jobs? Does all of that have to add into their evidence, or is it just enough to continue to see these lower inflation ratings?
No, I think in order for it to be sustainable, they want to see the cause. And I think that they think the main cause is this really strong labor market. So we saw a little more mixed report that came out most recently. If we start to see lower wage growth and a somewhat weaker job market, along with declines in core inflation, I think they'll then think, we potentially could be on the sustainable path. But until they see both inflation coming down as well as what they see as the key cause right now, which is high wage growth coming down, they're going to keep at it.